Crazy Frank!
Welcome to Let's Be Frank, the weekly podcast that gives a quick take on U.S. stocks from the perspective of a value investor. I'm Brian Frank, a professional investor for over 20 years specializing in small and mid-cap value stocks. Every week, I'll cover what is working, what isn't working, and talk about the value we're finding on the hunting trail. Find out more at frankfunds.com. Now let's get to it. Today is Friday, June 19th, 2026, and the market had another wild ride this week, culminating with the largest options expiration ever. We saw some incredible moves on the upside for high beta or more volatile stocks and significant downside for low volatility names. Perhaps this will reverse next week as positions are rebuilt, but for this week, the party continued for high momentum, high risk stocks. That brings me to what worked in value. The independent power producers, or IPPs, like our position in Vistra, ticker symbol VST, had a big week. After consolidating for nearly a year and reaching 52-week lows last week, several analyst upgrades and M&A deals in the space reignited the excitement around electricity. In my opinion, IPPs are the way to benefit from the AI infrastructure build-out while maintaining a valuation discipline. These business models have changed for the better with higher power prices, longer contracts, and higher margins. Now, let's move on to what didn't work. While small and mid-cap consumer staples rallied this week, the larger market caps we own in consumer staples like Hershey's, ticker HSY, continued to decline. Investors still prefer computer chips to chocolate chips, and one of the least sexy sectors is consumer staples. As an investor, I have to resist the FOMO in hardware stocks while focusing on the fundamentals in Hershey's. This is a company with high returns on capital, a steady 3% dividend, and a business model that is not only resistant to AI, but has been battle-tested in the past year with GLP-1s, tariffs, and commodity inflation. Next, that brings us to on the hunting trail for value. I am at my maximum allocation for consumer staples, but I am still researching this sector because the businesses behind the stock prices are doing well, and in the few dips we've had in the past week, the pain here reversed with positive returns, while the indices declined. If I can find even higher quality and better opportunities that I currently own, I may take a loss on one of my staples positions and swap it for something better. I still believe that consumer staples offer some of the best value in the whole market, and those business models are resistant to any cycles like recessions or some of the hype that's going on in AI. I do think consumer staples will be rewarded over the long term, and this whole group really trades at a discount to where it normally trades. Wrapping up, markets have been volatile, with large options expiration and a frenzy in memory stocks continuing. Outside of this group, fundamentals are still strong, with plenty of opportunities for disciplined value investors. Consumer staples could be a great offset to the AI infrastructure and index investments in many portfolios. Thanks for listening.
Performance data quoted represents past performance and does not guarantee future results. The investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be lower or higher than the performance data quoted. You may obtain performance data current to the most recent month end by calling the Frank Value Fund at 1-888-217-5426 or visiting our website at frankfunds.com. Returns include reinvestment of any dividends and capital gain distributions. Non-FDIC insured, may lose value, no bank guarantee. The fund's investment objectives, risks, charges, and expenses must be considered carefully before investing. The prospectus contains this and other important information about the fund, and it may be obtained by calling 1-888-217-5426. Please read it carefully before you invest or send money. This publication does not constitute an offer or solicitation of any transaction in any securities. Any recommendation contained herein may not be suitable for all investors. Information contained in this publication has been obtained from sources we believe to be reliable, but cannot be guaranteed. The information in this publication represents the opinions of the individual portfolio manager and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Also, please note that any discussion of the fund's holdings, the fund's performance, and the portfolio manager's views are as of the recording date and are subject to change without notice.